Good morning, afternoon, or evening. I am Stephanie Joy with All Things Social Security and the attorney at Joy Disability. You're about to see what should be a question and answer format type of chat from our live session on a particular topic that we find that a lot of people keep asking about. So I'm sharing it here. If there are pieces that could have been added that weren't added during the live, because it's a kind of a fast-paced Q&A that we do every Wednesday at 1 p.m. You might just find that I added something to the end of it to give it a little more clarity and a little more details for those that are interested in that particular topic. So check to see if that's at the end. Otherwise, enjoy the video. Bye-bye. Yeah, I was just interested in what in practice they do with any work activity as far as functional capacity post-approval. Keep track of it. I would just be really careful. Tailor it. I always say, if you're going to do self-employment, tailor it around the rules for Social Security disability. You know, you could do it. I mean, I know how I would be doing if it was me, because I know the rules, and I think you know a lot of them too, Jen. So just tailor that, the hours put in, keep them documented on a calendar. So in real time, so like 3 years later when it comes up, you can show, no, here's my calendar. It's exactly what I did. If you have clients that pay you, you deposit that money right in the bank. Keep track of all your expenses so you can write off whatever you need to. That makes it show that it's the net earnings from self-employment is what counts, and that keeps it under SGA. Now, if someone has not prevailed in their case yet and they're doing self-employment work because they don't have a prospective DLI and they want to file again, then same thing with the Social Security work, except you want to make sure you maybe don't write off every single business expense you possibly could, because you want to pay taxes on at least that 8,000 or 9,000 that's left. So leave that as taxable. So self-employment income, net earnings from self-employment, it's almost like what's at the bottom of your Schedule C, because you want to earn the credits for that work. Still keep your hours low and everything, whatever works out, but you want to get those credits to either gain back insured status so you can now file another Social Security disability claim. It probably negates SSI, but if the person already was denied disability already, their evidence wasn't wasn't enough anyway in the eyes of the SSI. Jen says, I can click it properly. What the heck? How easily do they kick people off if they are working, even if just self-employed is not just self-employed, I would say. That's probably easier to screw up, because the law sometimes is different than the thresholds for certain ALJs. No, the ALJs have to follow the same laws. And really, it's not going to be the ALJs that kick you off. It's going to be the lower levels, because they're the ones that do the CDRs. You might have to appeal, if you disagree with their finding, which could include, they had me at over SGA, but actually my earnings was actually far less. I just failed to write off XYZ. I didn't even know, I wasn't really in tune that I could write that off or whatever. If I wrote that off, I'd now be under SGA. But the numbers are all the same. It's the hours that get a little, those are not carved in stone. So it's what you're doing and the hours, and whether your pay reflects, because if you're working 35 hours a week, but you're only making $1,000 a month, 35 is actually probably considered full-time, but let's say you're doing 25 hours a week, you're self-employed, you're a lawyer, and you're learning less than $1,000. That means you're getting underpaid probably for your work, purposely. So it's going to be like, no, the value of those lawyer hours are probably at least $100 an hour or whatever. So that income is not reflective. They're fudging things. Maybe they're getting a free, like they're playing around with it. But otherwise, for people that aren't doing that, which would be the 99.99% probably, it's doable. The problem with having active hours is that it often shows that they are doing more than they said they could not do before, now that they're self-employed. So, and we're talking about staying under SGA, so this part wouldn't matter, but you never want it to become past relevant work either. So you want it to be under SGA. Good morning, afternoon, or evening. Your video is about to start. I wanted to remind you of our newer Wednesday, 1 p.m. live stream Q&A on all things Social Security. Visitors are welcome to post a question in the chat, and I'll do my best to answer it. It's on a first come, first served basis, so please get there on time. Otherwise, if you care to be a member and get some different kinds of perks, feel free to click the join button below or just click it to learn about them. Anyway, I hope to see you Wednesday. If not, enjoy the video. Bye now. Let's look at the differing rules that apply to self-employed disabled people collecting Social Security disability and how they're a little bit different than SGA, the limited SGA analysis for a W-2 worker that works for a whole nother company, not them just themselves. So it's a big long section here. Let me just tell you the name of it. It's section 404.1575. It's called Evaluation Guides if you are self-employed. I'm just going to hop down to the section number 2 that says General Rules for Evaluating Your Work Activity if you are self-employed. It says, we will consider your activities and their value to your business to decide whether you have engaged in substantial gainful activity if you are self-employed. We will not consider your income alone because the amount of income you actually receive may depend on a number of different factors, such as capital investment and profit sharing agreements. We will generally consider work that you are forced to stop or reduce below SGA after 6 months or less because of your impairment as an unsuccessful work attempt. And then they refer you to another paragraph. They will evaluate your work activity based on the value of your services to the business, regardless of whether you receive an immediate income for your services. We determine whether you have engaged in substantial gainful activity, SGA, by applying 3 tests. If you have not engaged in SGA under test 1, then we will consider test 2 and test 3. The tests are as follows. Test 1. You have engaged in SGA if you render services that are significant to the operation of the business and receive a substantial income from the business. And the substantial income generally is that SGA number. Test number 2. So if you are not found to be doing substantial gainful activity under test 1, they're still going to check to see if you are otherwise doing it under test 2. It says you have engaged in substantial gainful activity if your work activity in terms of factors such as hours, skills, energy output, efficiency, duties, and responsibilities is comparable to that of unimpaired individuals in your community who are in the same or similar businesses as their means of livelihood. What that tells me, just as a little aside, guys, is test number 2 is the one that you can better show, I think, and argue that you didn't earn SGA income, but you also didn't engage in activity because maybe you build a widget and it takes you 4 hours and then you sell it, whereas the other people build it in 5 minutes. And so, you know what I mean? They can get so much more, yours takes so much more time. The value of your work per hour is far less. And that's something that I would be arguing. I know it sounds weird when you talk about widgets, but it can really be applied to anything. It could be applied to a lawyer. I mean, writing a brief could take you 3 weeks or it could take you 1 day, you know, and if you can't sit that long and only put in 45 minutes at a time, obviously it's going to take you a lot longer than the person that can plug away for 10 hours and get it done. Test number 3, you have engaged in substantial gainful activity if your work activity, although not comparable to that of unimpaired individuals, like number 2, oops, I just lost my spot. If that activity is clearly worth the amount shown in the charts for SGA, when considered in terms of its value to the business or when compared to the salary of that an owner would pay to an employee to do the work you're doing on. That's another good one that can really help because kind of like number 2, if it takes you 4 hours to do what should take 5 minutes if another person did it, then the value of that work is clearly not the same as an unimpaired individual. And that's what you want to get at. So that's where some of those descriptions are going to be important when you're describing how you do it. There is more to this, guys. They have a different standard for if you've been collecting for less than 24 months or more than 24 months. There's some different things about being a farm landlord, all sorts of different details in here. And I will try to remember to post the link to this particular code section so you can see it because it is important for self-employed people. Let me just see one more thing too. Of course, I can't find it when I need it. All right. I wanted to go into a little bit that 45-hour business we talk about. In a different section lower on, right underneath the 3 tests, they said, what do we mean by significant services? It says, if you are not a farm landlord and you operate a business entirely by yourself, Any services that you render are significant to the business. In theory, then, guys, if you're an Uber driver, you're self-employed because you get a 1099. So you are giving significant services to your own business. If your business involves the services of more than one person, we will consider you to be rendering significant services if you contribute more than half the total time required for the management of the business. Now, going back to the Uber driver, what is the management of an Uber driver business? Probably all of like 5 minutes a month. Because literally you just look at the screen and go pick up the person, right? Or you render management services for more than 45 hours a month, regardless of the total management time required by the business. So again, if you are self-employed, you really almost have to describe what you're doing management-wise. For a lot of people, it's not going to be much. It's not, if you're managing a store and you're there, you know, a little bit, but then you're doing all the bookkeeping and scheduling and all that at home from your recliner, that could be a lot of management. If you are doing Uber work or there's no management, most of your work is the actual hands-on doing the work that any laborer would do for your business, I would say that's probably not management. Just double checking if there's one more reference to that. Yeah. So just be careful about those self-employed jobs and keeping it kind of explained sufficiently so it's clear that you are not A, doing a lot of management, or B, doing substantial gainful services. You really have to think about the minutes and the hours that you're actually doing the work, not that you're sitting there resting so that you can go back and do another 15 minutes. I wouldn't count that as work time at all. That would be non-work time. And that's how you can really more accurately represent how low your hours really are. All righty. I hope that's clear, guys. I will talk to you later. Bye. Hey, so if the subject matter of the video you just listened to is of interest and you want more on it, stay tuned. Here's another one about the same topic, but a little bit different. Bye now. Hey, so this is a share thanks to viewer Jennifer, who wanted to point out that when we talk about net earnings from self-employment, which is relevant when we are being calculated as to whether we exceeded SGA. And I will say, I believe when we're talking about earnings credits and trying to get enough credits to get your enough earnings to file with your return to get the Social Security earnings credits you may need to extend your date last insured and all that good stuff. So Jennifer brought up the fact, you know, when we just talk about net earnings to self-employment after your business expenses, she brings up a great point that I actually hadn't even thought about because, you know, we obviously don't engage in this part. These are just shares because we just do the medical. But if you look at, and I will share the page, the POMS section where they give the procedure on computing NESE, net earnings from self-employment. This doesn't apply to anybody who's a W-2er, an employee of an employer or was. They talk about gross income from your self-employment, which would include partnership income, which would exclude any types of income so specified by the Act or the Internal Revenue Code. Don't know what those might be. Number 4 is a big one, business expenses. Subtract any ordinary and necessary expenses incurred in carrying on the business. Number 5 is the part that Jennifer was alluding to, and it makes a really good point that you multiply the result by the 0.9235, 92.35%, which has to do with the half of the taxes paid on our income that goes to half of the Social Security taxes that we pay. As you know, self-employed people pay both halves, the employer side and the employee side. Employees only pay the employee side by someone else. The employer is paying that other half for them directly, not even withholding it. They withhold the employee's amount, then they take out of their own pocket the other half and basically subsidize the tax due for the employees, but self-employed people don't have that luxury, I being one of them. So they want us to multiply that by that after business expenses amount, and it's obviously going to be notably smaller, a smaller amount. So our net earnings from self-employment becomes smaller. Now, when we're talking about trying to make sure we don't go over SGA, that sounds nice. But now I'm like kind of concerned about, you know, it makes it harder if that same definition applies, and it seems to, but again, don't hold me to it. We got to still do the research that applies to the same NESC that applies to earnings credits. And the 1730 one must have to get an earnings credit in 2024 would be something higher now, wouldn't it? Because if we take 92% and change
of that, we are now at 1,500 and something. So something to think about. If I get more concrete, things on it, I will let you know. The SSA has not clarified the question. So anyway, we'll let you know. But great point by Jennifer that the 92.35% will be the number considered, not your 100% after business expenses. So kudos to her. Thank you so much, Jennifer. I will talk to you guys later. And if I come across anything to say otherwise for the earnings credits, and I put the feelers out there to my Social Security peeps to see if that would be the same. A self-employed person who has net income after business expenses of fee. If the SSA is only going to give them credit for 92% of that, now they're not going to get their credit unless they jack up that earnings even more. So interesting. Doesn't really seem fair to me, to be honest with you. Me no likey. Anyway, okay. We'll see where it's going. Bye, guys.